Don't forget to put your city and state in the chat for me, please. Tonight, we are talking about opportunity zones. Super popular legislation. We heard all about it, and then all of a sudden it's zero dark 30 on it. So we have a very good friend, all of us do, the officers, Venroy July, Esquire. He is the opportunity zone maestro, and we've asked him to come today. He is here with us. So please give a virtual hand clap and tell him where you are from. Put your city and state in the chat. We're going to get started in a few minutes. Y'all know it takes me a couple of minutes to set up my little thing here so I can see everybody tonight. How you doing, Dr. Keisha?
Just fine. How about yourself?
Doing well, thank you. And Venroy?
Hi, Venroy. How are you?
Hey, how you doing? Doing
fine. Hi, well.
Good.
Welcome, family.
Don't forget, everybody, put your city and state in the chat so we can recognize you. There we go. Okay, I got everything together. Oh, except I need to do this from here. Just in case. If you look at YouTube at all, we are really trying to grow our YouTube channel. So it's a Black 10K project. So don't leave Zoom. But if you want to go and check out our YouTube channel and rate and comment and subscribe to that. There's no rating on YouTube, but subscribe and get the notifications and all of that. We would love to have you there. So
are you seeing a hand raised?
So Donnie, you're on for next week.
Put his hand down.
On for next week. So okay, Ali is here from Indiana. We've got Robert from North Carolina. We've got Miss Vivian from North Carolina. Ashton from Delaware, Nicole from Waco, Texas, Robert from Florida, Felicia from DC, Dawn from California. We've got Dee in Seattle. We've got Essie in Texas. We've got Felicia in Georgia, Kim in North Carolina. We've got Gerald here from Virginia Beach. Vivian is clapping for Venroy. Got Arthur here from Kansas City, Missouri. Got Anderson from Florida. Jason here from New Jersey. Dedrick from Chicago. We've got Spolinski from Minneapolis. Donnie is here from Philly. Maria from Philly. We've got New York. We've got a couple of DC and New York people in YouTube. I see all of you. We are also streaming to our Facebook platform as well. We've got Michigan here, we've got Washington here, we've got DMV, we've got Ohio. So we are representing from sea to shining sea. Put a 1 in the chat if you live in an opportunity zone. Put a 1 in the chat if you live in an opportunity zone. So we can see how many people here live in an opportunity zone. Put a 2 if you're not sure if you live in an opportunity zone. Some people are saying too, they're not sure. Okay, so one of the questions we'll ask Venroy is to tell us how we can even know if we live in opportunity zones, because some of us may live in an opportunity zone and not even know it. All righty then. So, Tawana, welcome.
Hello, good evening, everyone. Sorry I was a few minutes late.
Oh, goodness. I know that Venroy is one of your favorite guests as well.
Absolutely. You know, I couldn't miss this. So I just got a call from my CEO and I was like, okay, I know this is important if you're calling me, but I got to call at 6. He made it quick.
Don't get fired. Don't get fired because of me.
Listen, I know my priorities. I got them together. And this was important.
So, there was, of course, a lot of turmoil in our country last week, and And we want to, first of all, extend our condolences to, if any of you had any family members, friends, that were affected by this. I know that they may not have passed away, but some of us know people who were at the Capitol, who work for senators and Congress people, or on police departments, or for the government period, et cetera. We know that there's a lot happening in our country right now. And we just need to be vigilant as people and as a people, and pray for our leaders and all of that. So I just did want to make a statement. I'll let Dr. Keisha and Tawana make a statement as well, but let anyone know who was affected by this, even if you were just nervous about somebody that a friend or whatever, who could have been in that area. I know how nerve-wracking that is for many of us. So Dr. Keisha, Tawana, did you want to say anything else with regards to that?
I know it. I just wanted to echo what you were saying, and then also kind of just settle ourselves in the sense that, we were all born at such a time as this, so we've got the stuff to deal with this and to, be effective during this time. I often think about, wonder why I wasn't born back in certain times or whatever, but this is our time, so we've got the stuff. I just believe our Creator is wise enough for us to be equipped for the time and for the moment. So it's up to us. So let's join together.
Yeah, Tawana?
Yeah, I'll just add, we're coming off of a really rough year. 2020 was one hell of a year, right? And starting 2021 off in this capacity is equally as tough. And I just want people to try to stay positive, get the clarity that you need from this, but don't let this sink you into a place where you can't function, right? These things, when they happen, they should motivate us to have change in our lives and in the lives of those that we love. This is more of a reason, in my opinion, for us to go after this generational wealth with everything we have. This is proof positive. We need to throw every resource at it. We need to learn as much as we possibly can, and we need to stop playing games.
Absolutely. Venroy, did you want to make, any statements about this, everything that happened last week? We're not a political group per se, but we understand that wealth and politics go together. So.
No, I mean, look, I think everything, just want to echo what everyone is saying. I think, quite frankly, the reaction of the people who were down in the Capitol, to me, actually just highlights the need for groups like this and for us to be talking about, our economic empowerment, because quite frankly, you can sugarcoat it however you want to, but there's a fundamental, basis behind why these people are upset. And the basis is that in large part, their America is changing. And so it's up to us to really kind of take advantage and not to let that stop us from kind of leading to our own empowerment. So,
yeah. I mean, right now, I believe that every Black person that needs to be on their wealth building game. Seriously. I'm gonna actually do just a quick presentation, just tell you a bit about the survey results and some of the things that we have coming and forthcoming within 10K. But this year, I think for us is an opportunity for us to lay some real foundation with regard to that, if you have not already done so. And I hope that the 10K project is one of the places that you come to get what you need in order to make money, make more money, whether it's through a main hustle, side hustle, getting a better job, etc. Then number two, how do you manage your money if that is what you need in your life? Learning some easy and actionable tips and tricks and hacks in order to do that. And then number three, how do we multiply it? How do we multiply the money that we have and be able to give that to our kids, grandkids, great-grandkids, et cetera. So with that, I'm going to just do a really quick intro of the 10K project. And you will see if you've been here for many weeks that our presentation is going to change a little bit because we are going to be expanding our services and we want to let people know what we're doing. So the first thing is, if you are a member, then we have a gentleman named Ace Chapman coming on tonight at 8 p.m. to talk with us about how to start a micro private equity company so that you can buy businesses. Some of your relatives may want to buy businesses and you may want to invest in those businesses. How do you do that? Ace Chapman has been buying businesses since he was 19. And many of you know that I've been talking about one of the ways that we can build wealth within the Black community is not just to start businesses, but to be strategic in buying businesses. And when we talk with Venroy tonight, I'm sure that he'll have some things to talk about within the opportunity zones and some of the funds and money that's available with regards to that as well. It's time for us to take our knowledge, our education, and our conversations to the next level. And this is one of the ways that you can do it. So if you are not a member, you would want to join the 10kproject.com just for this session and everything else that we have. We hope that you would come and join us. If you join in the next, well, let's say before 7:45 p.m. tonight, I'll make sure to get you the link for the 8 p.m. session with Ace Chapman. So we're talking about escalating your wealth journey, and we have several different ways that we're looking to help you just get the knowledge that you need in order to do it. Whether it's the Family Wealth Challenge, whether we're talking about how do we buy land or real estate, tax liens, stock options, private mortgages, Bitcoin, cryptocurrency, buying businesses, multiple streams of income, and ultimately building Black wealth. That's what the 10K Project platform is all about. During the survey that we did last month, the primary thing that everyone asked for were smaller mastermind sessions where we can apply what we've learned. And those are going to start next month, February 2021. So we're going to have a topic of the evening. We're not going to have necessarily a guest speaker, but it is going to be us looking at some expert information and being able to apply the information. And of course, we're going to start with the Family Wealth book by James Hughes Jr. So you would definitely want to get that. That's going to start the first week in February. So every Tuesday, or I would say most Tuesdays, that is going to be our mastermind time. That is for members only to come in and us to really take a deeper dive in the topics around buying land, buying businesses, investing, doing stock options, et cetera, et cetera. So if you want to become a member, we'd love to have you. It's a one-time lifetime payment of $100. It gets you not only access to the session tonight, but our previous members only wealth building sessions, our peer-to-peer conversations. We call it community coaching or masterminds. We're still playing around with that term. We have exclusive content that's on our Knowledge Center, and Dr. Keisha is finishing up the business directory. So we are looking forward to that coming soon. Now, many of you may say, well, what about what we had spoken of with regards to us applying with the SEC and FINRA? That is still on the table. We are still doing that. However, we are expanding our services, revamping things, et cetera. And we just want to make sure that all of you are abreast of where we are within the 10K project. So Tawana and Dr. Keisha, do you have anything to add with regards to what I said?
No, someone just asked what was the name of the book again, so I wanted to hold it up for them so that they can get that.
Yeah.
But no, you covered everything.
Perfect. Okay, Dr. Keisha's shaking her head too.
Agreed. Yeah, I see people are still resonating with the idea. Somebody said, I'm paying now.
Yeah, yeah.
All
Look,
right.
yeah. So with that, let's talk about these opportunity zones. Vinroy, like I said, is, in my opinion, the king, the maestro of opportunity zones. It was a popular legislation that everyone was talking about a couple of years ago. And I'm the type of person that comes 2 years later and says, I wonder whatever happened to that. And I asked Venroy if he would come, and he said yes, he would. So he is here this evening. Welcome, Venroy.
Hey, thanks for having me.
All righty then. So why don't you take like, I don't know, 6, 7 minutes and just tell us what's been happening over the past 2 years. First of all, for people who don't know what opportunity zones are at all, why don't you reintroduce what the legislation was and then talk about what's been happening over the last couple of years?
Okay. Um, well, first of all, again, thank you all for having me. So the opportunity zones legislation was passed. So I guess I'll start off by saying that, um, I don't want to get, I don't want anybody to have the impression that opportunity zones aren't still happening. They are 100%. A lot of money is actually still going into them. It's just that we're not hearing about it as much. But so I'll tell you a bit about the opportunity zones and why they're, I think, so transformative. And I've actually written a couple of articles because I think that, well, we'll talk about why, my thoughts on the opportunity zones. So the opportunity zones legislation was passed as a part of, the Trump tax overhaul. And what it did was it essentially permitted every state to designate areas as opportunity zones. And those are low income census tracts or adjacent to low income census tracts. And that's important because what you end up seeing in a lot of these states is that you'll have areas people are like, oh, those areas aren't really like low income census tracts. Why are they designated as opportunity zones? And it's because of that adjacent to low income census tract piece. So I know here in Baltimore, there's a bunch of commotion about an area that, the Under Armour guys had bought, that was designated as an opportunity zone. And everybody was like, there's already money going there. Why would that be an opportunity zone? But it's that. Um, Most states, it's actually, earlier we talked about how do you find out if if you're an opportunity zone. Most states actually you could actually go and Google, um, and just do an internet search and find out where the opportunity zones are in your particular state, and they're designated by zip by census tracts. So what does the law provide? The law does. I like to say it does. I think of it in like two sets of benefits. The opportunity law says that if you have capital gains, and that's very important because we need to talk about that from our perspective as it relates to people who are on this call. If you have capital gains, so capital gains are gains that you get from the sale of an asset. So if you have, except for your house, because your primary residence, because the first, I think $250,000 of that, of any profits that you make from that is not considered capital gains. But if you had real estate or other real estate assets or stock, or other assets, and you sold it and you get a gain, a profit from that, that's capital gains. Capital gains are already entitled to a lower tax rate. But what this law says is that rather than paying, so if let's say I had sold off a bunch of Google stock this year and I made $100,000, right? The tax rate is the capital gains tax rate, assuming a 15% tax rate on that $100,000, I would, come tax time, have to pay $15,000 in taxes on that $100,000. So I would walk away with $85,000. What the opportunity zone law says, the first thing is that it says, if I get $100,000 and I put it in an opportunity zone fund, I don't have to pay taxes on that money until 2026 if I keep it invested in that fund for that time period, right? So you get a deferral of your taxes. So I don't have to pay it now. I will have to pay something in 2026, but I don't have to pay it now. In addition to that initial bucket, it also says if I'm invested for a 5-year time period, that I get a discount on my taxes by 10%. So you get a step up in tax basis. So you get a 10% discount. So rather than me paying $15,000 now, in 2026, I would have only paid 90% of 15,000. Now, because of the fact that we're past the law was really in effect it really was 2019 was really the time, because you need a full 7-year time period to get the full benefit of this first tranche of the law, because it said if you invest for 5 years, you get a 10% tax benefit. You get a 10% discount. If you stay invested for another 2 years, then you get an additional 5% step up in an additional 5% discount. So you were eligible to get a 15% discount on your taxes. And so this piece actually caused a lot of confusion, because when the law first came about, there was a bunch of really bad advice on the internet that said that if you weren't invested by 2019, you couldn't benefit from the law. And that was just plainly incorrect. You needed a full 7 years to get the full benefit to get you to 2026. So that means in order to get the full 15% discount, you had to be invested by 2019. But that did not mean that you couldn't benefit from the law unless you're invested by 2019. And in fact, because it says that if you're invested for 5 years, you get a 10% discount, you actually have up until 2021, December 30, 2021, to get a 10% discount on any capital gains funds that you're invested in the Opportunity Zone Fund, in 2026. In 2026, you'll pay 90% of whatever you are going to have to pay now. The second, so that's kind of the first bucket of benefit. The second benefit, which is in my view, the much more significant benefit, is that any money in a capital gains invested in the Opportunity Zone Fund, which is invested in the Opportunity Zone, if you're invested for 10 years, you get any appreciation that you get from that investment when you sell it or when you refinance it out to get cashed out, you pay no taxes on that. Right? I cannot emphasize how important this is enough. And it's funny because I just realized I'm a part of a financial literacy book club, and the way that I kind of think about it really kind of hit me what the opportunity zones are. They are a souped up Roth IRA, right? You think about it this way. You put money in, and so long as you hold it for at least 10 years, it grows tax-free, right? So whenever I'm talking about this, I want people to understand, like think about like being able to invest $100,000 in some of our urban communities that have been gentrified, and now properties that were $100,000 are now worth $1 million, right? And that's not a crazy concept, right? If I had invested $100,000 and that's now worth $1 million, that $900,000 gain that I have, I could take that tax free, right? So just understand that that's the reason why everybody was talking about opportunity zones in the beginning when it first came out, because it basically, the problem though is that it's actually a benefit that's largely for the wealthy, right? Because, and I go back to the point that you have to have capital gains, right? It's not ordinary income. It's not like I can have $10,000 in my bank account and go invest it, right? Because it doesn't count. You don't get the benefit. In fact, the law is very clear that if I have ordinary income and you have capital gains and we put the money in the same account and we invest in the same asset, we treat those two investments complete like two different funds. My money gets treated like regular gets taxed regularly. Your money, you don't have to pay taxes on it until 2026. And then you also get the tax benefit of the 100% step up in basis, which means you pay no taxes on the appreciation, right? So that's a kind of basics about like how the law works. Now the other piece, which is like they've been making, so the law it passed and then they had like 3 sets of regulations. So this is the 3rd set of regulations. Right, I was looking at it before this call. It's like 500 and something pages long. Right? So understand it is a very intricate like piece of law. But the fundamental thing is, if you have capital gains, you invest it in an opportunity zone fund, which, to be clear, opportunity zone fund just means you form an LLC or a corporation. That's a fund. And you invest that money in an opportunity zone, which you can find by Googling opportunity zones in Baltimore or opportunity zones in New York. I've actually spoken in New York in an opportunity zone about the ability to just find this stuff. So they have them across the different states. Since the law has happened, and again, that's why I want to be clear that opportunity zones have gotten traction. And I actually think we're going to see more opportunity zone investment now. And here's why, right? First of all, there's already been like billions of dollars that have been invested in opportunity zone funds already. Like, let's be clear. Now, the big issue that everyone talks about with opportunity zones is that it's ultimately going to lead to gentrification. I think that's inevitable, right? Because the reality is that if you take $100 million, which is a small compared to some of the bigger funds, and put $100 million and invest it in a community that has been historically underinvested in, it's going to lead to gentrification. Now, so I think that we have to just accept that as like, that's a part of what's going to happen. However, and I've tried to be on my drum about this, it does not mean that we cannot be included, right? Because the reality is that the law provides a ton of flexibility, right? If you can get capital gains by, if you have, like, there's no limit on how much capital gains you have to invest. There's no limit on whether it's short-term or long-term capital gains, right? And so, no, look, I'm not trying to say this is a strategy for anyone, but I know that certainly over COVID, I pay a lot of attention to the markets, and we see all these people that are getting these gains in the markets, right? So those gains, if you sell those, I'm not telling you to do it. I'm just using an example here. That is capital gains, which would be eligible for opportunity zone investments. So I know that me personally, I have done smaller investments with a bunch of my friends who had some capital gains that they got from the stock market, and we're pooling our capital. It's not going to be $100 million, but the reality is that I don't need $100 million, because if I can find a property in an opportunity zone and that I believe is changing, I can invest that. And if that property appreciates over the next 10 years, then any appreciation, I get tax free. And remember, I'm also eligible to get like the rental income that I'm getting off of that property. So it's not like you're either getting this or you're getting this. You can still get the benefits. You have to pay taxes on those, but you're really paying for the appreciation. And I think there's going to be a lot more money that's going to go into this, because a couple of things. I actually just wrote an article that talked about why I think there's going to be a ton more money that goes to it. First thing is that we have seen how the stock market has gone crazy over the last couple of months, right? So there's a ton of capital gains that's being realized right now, right? Markets are at, from their bottoms, we're hitting like levels that we had never seen before. So there's a ton of gains that are being created in the market now. And so everybody's afraid that because of the fact that with Biden as president, they're concerned that there's been a bunch of talk about the fact that they're going to raise the capital gains rates. And if they do that, that means the money that you now are paying 15% on, you might be paying 25, 30% on later. And so what better way for me to shield that money and wait for another president that's not going to raise a capital gains rate than to put it in an opportunity zone where if it's there, I don't have to pay any taxes on it now. And I can wait until at least 2026 to then pay the rate. And if I happen to hold it for another 3-4 years, then any appreciation I get, I take it tax free, right? So there's just there's a lot of movement going on in the opportunity zone. So they've actually changed some of the rules that they say that the rules are that you have to, I had to, if you you can buy a property, or you can invest in a business, or you can buy a business, or you know, so like those are, that's the other thing that is very attractive about the opportunity zone. There's not a limit on how on the type of investment that you have to make, right? So long as it's in an opportunity zone. And it's actually they've created a ton of flexibility in terms of even investing in businesses in the opportunity zone, that we can talk about. But there's a ton of opportunity. And I think for us, one of the strategies that I've been going through with some of my friends is like, you can generate capital gains because of the fact that you actually, when I talked about the two buckets of the law, right? The first bucket is, yeah, that to me is really designed for really wealthy people, right? I don't really care that much about the 10% discount on my taxes, right? I mean, it's cool and it's great on that small amount of capital gains I'm going to get, fine. But the dollars that I am going to be making in terms of capital gains is not so much that the 10% would be nice, but it's not changing my life, right? The much more important piece, quite frankly, is that 10-year hold that you get tax-free growth, right? And that you can hold until 2047, right? So my strategy that I've been talking to some people that I know is like, you can generate capital gains. You have until 2026 to generate capital gains, and you can utilize that money and use it to actually reinvest in your own communities and change these neighborhoods that we see are being gentrified, and just hold it, and you're collecting income, and you can, allow for market forces to happen, but be a part of it and have control of your own communities and see the growth and be able in 10 years to take that money tax free.
So I have some questions for you, Venroy. Okay, so is it possible for a person, because like you said, the stock market really went up this year, right? If they have money in a traditional IRA, not a 401k attached to their job, but like a traditional IRA, to be able to take is it just the capital gains? They just take the capital gains, they move it over. I'll check with your attorneys, everybody, to figure out how to do this legally, because and with your accountants, please. So, but the idea is you could take the capital gains that you've gotten this year, over the past couple of years, move that money over. Now, here's my question from a strategy point of view. Are you then able to do what we do traditionally, which is we have 10% for the property, and a traditional bank or a private lender would give us the other 90%?
Yeah. So that's the thing about the law. You're 100% allowed or able to stack on financing to the project that you're investing your capital gains in. And I want to just back up because let's change our example.
Okay. All right.
IRAs. I don't want people taking money out of their IRAs because I think that's the consequence of doing that. So I don't want to put that out there. But let's say you had a brokerage account like TD Ameritrade or Share, whatever, E-Trade, whatever, right? And you had gains. And you wanted to sell some of your stock, the capital gains that you got from that, you could use that, put that into, I'm not advising you to do this. I'm just saying this is what you can do. You sell the stock, recognize the gain because you're afraid that the market is going to crash or it's going to correct itself. You sell that and you form an LLC or a corporation, put that money in a bank account for that LLC as your contribution. You and somebody else, you've now created an opportunity fund. You can absolutely find a property and use your money to put it down on the property and still get financing from a bank on top to layer on top of that to allow you to do the renovation. Now you have, for real estate, there is a rule that you have to substantially improve a property. So that's the other piece that's important. It isn't just that you can go find a nice house or a nice property. It has to be for commercial use. So you can, meaning you can be renting it, but you can't just go find a property that's nice, that's in an opportunity zone, and that's it. You have to put as much money into the renovation as the acquisition cost, not including the value of the land. So let's
Okay.
say the property is worth 100. Let's say you buy it for $100,000 and the land is worth $20,000. You have to put $80,000 of renovation into it. Now that has been viewed as like, some people view that as, most of them. So most of the money that we've seen thus far has gone into real estate.
Mhm.
That have flowed from opportunity zones has flowed into real estate. Because why? There are a couple of reasons. First, I there's a rule. A part of the rule says that 70% of your tangible assets have to be in an opportunity zone. The good thing about real estate is that it does not move. So if it's there, it's always got to be in the opportunity zone, because the opportunity zones ain't changing, right? And so, which is a little bit different on a business, but they've actually solved the problem on a business piece as well. So, but we could talk about that. Um, but the realist, so people are, and people just were comfortable. They were like, if I could put money, and there were projects that had already penciled. So that's a lot of the thing that's been happening. Like property buildings that were already being built, renovations that were already happening, development that was already happening, people just that were happened to be in opportunity zones. Now they raise opportunity fund money and put it in, and now that money is is now eligible for this significant tax benefit. So there was a
Mhm.
whole hubbub about that, about the fact that a lot of the money, and that's a reality, right? A lot of the initial tranches of money have gone into projects that had already started or had already penciled, right?
Mhm.
But I actually believe that that was going to happen anyway. It's market forces. At some point, the most people who are really, really wealthy, they have options about where they put their money, and they were going to get those bet the top projects anyway. Now that those are done, and now that we see with the risk of increased capital gains, and now that we see the Democrats in office and everybody's talking about making sure it's more equitable in terms of how the money is spent, they are going to have to look deeper and look into other projects, and potentially projects that are not as attractive as the ones that they initially invested in. But we 100% can take our capital gains, pool our capital gains with other people who have capital gains, and invest in projects, whether it's a business or real estate, get debt on top of that, and we would still be eligible. The money that you put in is eligible for the tax benefits that are provided by the law.
Great.
Venroy, how
So,
are, oh, sorry, go ahead, Sheree.
well, I just want to do one more thing really quickly. Miss Vivian put in North Carolina where the opportunity zones are, but I know there are a lot of websites and a lot of them were given bad information. What is the official place that we go to find out if we are in an opportunity zone or if an
So
area?
so I think each of the states has their own. So I know in Maryland, it's the DHCD's website. They actually have a incentive lookup and opportunity zone lookup map. And you can put your address in. I think a lot of the states are doing this. I obviously haven't checked every state, but they have basically a tool where you can essentially go and type in an address, and it will tell you if you're in an opportunity zone or not.
Okay,
So I
perfect.
would
Go
just
ahead,
imagine
Tawana.
you have to do that for this in each state.
Yeah, and I think they're even by cities, not just states.
Yes,
So
right. They
city.
are by city. So like here in Baltimore, we have a Baltimore specific opportunity zone lookup feature, and you can figure out whether or not you're in one or not. But this brings up an important point though, because to top this conversation off, we asked, are you in an opportunity zone? And I want to be clear, because this is something that I think has caused some misunderstanding. Whether or not you own a house that you live in an opportunity zone, you're not the major beneficiary of the law. The law is really meant, the law is really benefiting investors, right? Who have capital gains are going to buy properties in that neighborhood. That's in that census tract. Now you might get you might get the benefits that if you are in an attractive census tract that's getting a lot of investment, your property values will appreciate because there's going to be all this new investment in the area. Or if someone, and I've talked about this, if you are in an attractive area and there's a whole bunch of developments happening, I would just caution you, because this is just me being a cynic. I anticipate that what's going to end up happening, which has happened to Black people historically, is that we don't know about these laws, and then people come and they'll try to offer you some money that might be a little bit better than what you would otherwise get in the market. And so you're like, oh, this is great. But the reality is that they're looking 10 years from now where that property is going to quadruple or whatever X they're going to have on their money. We need to be thoughtful about making sure that we are going to be beneficiaries of what's going to happen in the law. Like, I'll tell you, I own a real estate portfolio in Baltimore that's in an opportunity zone. Just I bought it before it was an opportunity. Every day I get calls trying to buy my property. And I'm like, absolutely not, because I know what's going to happen. And so it's not, I'm willing to hold off and wait. And I would just, look, everybody's financial situation is different. You have to consider what's in your best interest. But the reality is that you should just pay attention to the fact that if you're in an opportunity zone that is attractive, that there's other movement going around, that other things are being bought up, that there's a reason why that's happening. And do you want to be the beneficiary of that over the long term?
Yeah. And another thing is, if you've got Big Mama, Nana, some of these elderly people especially, try to figure out a way that it has to go through you as well, whether you're on the deed or something like that, because they will try to come and take advantage of our elderly with these things. And they have fully paid off houses and, all of that. So Go ahead, Dr. Keisha. I just want to make sure I made that comment.
Yeah, that's really actually in line with what I was going to ask. Generally speaking, should we, people who find themselves in that situation where you are in an opportunity zone and you are getting these calls, is there somewhere to go, like maybe the development? Are there, like, in your area, like developmental places somewhere? Because obviously somebody knows something, or either you think they're just speculating, or are these kinds of things set up somewhere, like there's a plan that
so
kind of get a head up on?
Two parts, right? So first of all, the fact that remember how the opportunity zones were designated. Each state's governor got to decide where the opportunity zones were going to be. Like,
was there a formula that they used, or they just picked a set of parcels on the map?
There was their choice. They could choose which of the census tracts that were low income, they could select which ones were going to opportunity zones. But what many states did was they were very strategic about the areas that they're like around assets that they want to see developed. If they're in census tract, they would designate it as opportunity zone. So I'll just say again, because I'm in Maryland and I'm very close to this, they were very thoughtful about putting stuff around the water by University of Maryland, by Johns Hopkins, by the other anchor institutions and other anchors that they were trying to get developed, right? And so they're all over the map. And in fact, it's weird because you'll end up seeing, actually, there are situations where, like, to just show you how like sporadic this was, there are areas where, like, if this is my finger and all of my hand is an opportunity zone, the circle is not. Like we're actually we see stuff like that don't make any sense. Like,
yeah, that is like, clearly.
It's like you'll have one house, like there are situations where across the street, one side of the street is an opportunity zone, the other side of the street is not an opportunity zone. There are situations where there are plots of land where a piece of the land is in the opportunity zone and the other piece is not. They obviously had to they changed the laws, the rule in terms of how you deal with that type of scenario. But that's kind of when I say like it was just kind of like they just picked, that's really kind of what happened. Now, in regards to like the people who are in the situation, like, so recognize that an area that's in opportunity zones, they have determined that there is some value, whether or not it actually reaches value or not, that they have decided there's potentially some value there, right? Now you have to go to like, the planning department for your city has like plans that you can see about like where they're trying to, like what kind of development they're planning on doing. And that, I mean, you have to kind of know how that within your city, because I'll tell you, the developers aren't going to tell you. I'll never, like, I remember being at an event with a developer that was talking about, and this was not related to opportunity zones, but he basically, in a small room, it was for all it was a Duke grad event. And I remember the guy basically said that like he had him and a bunch of his friends basically form different LLCs, and they would go buy properties from individuals separately using their different names and the different LLCs, but then ultimately it's all aggregated into one. So the developers aren't going to tell you. So you just have to kind of keep abreast of like what's going on, try to look at your city planning maps and see where the city is going and kind of figuring out from there.
Yeah, so we have a ton of questions tonight. So, I thought this would be a popular topic. It's probably more popular than even any of us had thought. So we may have to get Mr. July Esquire to come back to us sooner rather than later. So what I'll do is I will just pick questions that are, I think, most globally beneficial for us, and we may have a separate session just for members, so you can really get your questions answered, just a Q&A. So become a member, d10kproject.com. This is one from Donnie that I think is a good one. I need help with the definition of capital gains. How else would one have capital gains beyond stocks? She's rent perhaps, but she's saying, but is it appreciation in a property or any other way besides the stock market to get capital gains?
It's what we're seeing really, and I said this from when the law first started. This is like the best. This law was created for Donald Trump and his friends, right? It's because it's real estate. Like if it's not your primary residence, if you have like investment real estate, appreciate any gain that you get from that sale is capital gains. And that's where we're seeing most of the capital gains come from real estate or from the stock market. But basically any asset that you have that you sell that appreciates in value, that appreciation in value once you sell it is a capital gain.
So Tawana and Dr. Keisha, if you all see questions that you think we should ask as well, let me know. Kim has a question here. Do you have to earmark funds within a given period of time, like a 1031 exchange?
You do. So the opportunity zone law and all things are all kind of things are kind of, but I guess it doesn't matter now, but it was all kind of tricky because of COVID, right? So the law basically provided that once you generate a capital gain, except for if you were in like a partnership, like a limited partnership that sold and you weren't going to know what your gain was until tax time, then you could hold off, putting the money in until that, at the end of the year when you were notified. That's when your time period started. But it basically said that you had 6 months from the time that you recognize the capital gain to put it in an opportunity fund, right? And again, remember the fund is just, and I saw somebody ask this question, yes, a fund is just me and somebody else form an LLC that says that we're going to be invested in opportunity zones. And you want to put that in your LLC agreement, right? And that's now a fund. If you invest that money in that fund, you had 6 months to put that money into that fund. You then had an additional 31, I can't remember if it's 30 or 31 months to actually deploy the capital. So once it's in the fund, but it has to be pursuant to a plan, like you have identified some project that you're going to do it and you start dipping the money out, but you have to basically deploy all that capital. So you have 31 months to deploy the money. So again, think about this from like the big developers that are trying to do these big projects, and why I used to always joke about this is perfect for Donald Trump is that they develop a project, they sell it, right? They are looking to their next real estate development. They take that money and rather than have to pay taxes on it, you put it into a fund which invests in this next project. And we all know, we've seen before, some communities when they're changing or being gentrified, a 10-year time period ain't nothing. Like that, 10 years kind of like what it takes, right?
Yeah.
And so now over the course of that time, that all this value has been created. And you don't have to pay taxes on those different, iterations of like the recognition of capital gains.
So JD is asking, where can we read about these strategies and laws that explains it in plain English?
So I'm going to send to you. I'm going to drop. You're gonna have to do some. You're just gonna have to do some Google searching, quite frankly, because none of it is going to be in this age stuff. That this is sophisticated stuff that they're not trying. Like you have to like get somebody. You have to get a tax advisor to talk with you about this. But I did write an article that was published in Black Enterprise, I think 2018, either 2018 or 2019. I can probably find it and I'll drop it in.
I got it right here, I think. Making opportunity zones work in Black communities. Is that it?
So I've written a ton. I've written a couple of articles specifically about how Black people can benefit from or can take advantage of the law. I'm careful with my words because I've said before here, and I saw somebody basically implied something in the chat. You're right. Like this is going to lead to gentrification. Like I make no qualms about that. There are going to be some neighborhoods that I believe are going to be gentrified as a part of this. The question is, okay, how can we benefit in ways that are not exclusionary and do in what is supposed to happen, right? Because the law, they market it as like this is, and I struggle with this because like I'm actually a big proponent of the law, because whereas I believe that it's gonna lead to some bad results, but I think it has the potential to actually lead to some good results as well. Because I don't know how else you incentivize money to go into communities that have been historically underinvested in unless you give something like this. That has to be so attractive for people to act, because otherwise the money just never gets there. And so for me, the question really is, how do we utilize it for to do it in ways and get the results that we are looking for and hoping to
Yeah, we have to be owners. And that is part of the reason why gentrification hurts us so much, is because we don't own anything. But, if the house goes from $100,000 to $1 million, for example, and you own it, you have an option to sell it. You have an option to refi it and invest in something else, et cetera. It gives you options. So the other thing is, Venroy said that with these opportunity zones, you can't take like your regular cash, your earned income. I would say, however, that you could in a way, because we've been talking about following the money. Now, you're not going to get the tax benefits from it. But when we start talking about following the money, for example, what's happening in the Johns Hopkins area of Baltimore, and the economic development that the city is talking about and how it's already transforming and will transform. Maybe some of you don't have the capital gains, but you do have some of the earned income, and you say, you know what, I'm still going to invest in the community. Latrice says something that I want to get everyone's opinion on as well, because I disagree with it a little bit. So basically, you have to have a substantial amount of money in order to purchase a zone. And I'm going to change that to purchase a property or purchase something within an opportunity zone. So This would be something to do down the line, question mark. I think, no, I think you can do it with a small amount of money, is what Venroy has been saying this evening, is just like any other, let's say, that's why I asked about the property. Let's say there's $100,000 property, you have $10,000 in your opportunity zone fund that you and somebody else maybe put in 5 grand together into that opportunity zone fund. Can you then go to the bank for the other 90%? And then Roy said, yes, as long as you have enough money to do the renovations. Well, the bank may pay for some of the renovations, or there may be other funds out there for that. So I think one of the big things within 10K and within our community is we always think that these things are so high, whereas if we get a little creative, we probably could do it. Yeah, we may have to do it at a lesser level than Donald Trump's friends, but that doesn't mean we can't get in.
And I just want to piggyback off of that point, because I'm going to give you an actual real life example of something I'm doing right now. Like I actually I just formed a small fund. I have a couple of friends who each had, one had like 5,000, one had like $8,000 of capital gains. I had sold a house, so I have some capital gains, right? But we basically pooled a fund, and then Cherie, you brought up the point about maybe you can't participate in the tax benefits if you have ordinary income. Well, my model that I've been working on does exactly this. In addition to the fund that I had, the opportunity fund, I also had another group of friends who have regular income and pool their capital. And so the combination of those two sets of capital are being utilized to buy and renovate a property, right? I actually have a whole business model based on this potential, right? Because if you think about it, I'm gonna put something out there now. If you think about it, an opportunity zone investor and a regular investor are very different in terms of their horizon of return of capital, right? Ordinary income investor, the way that, and I do some real estate development here, they need their money back in a relatively short term span, and they need to get their return, right? They need to get their preferred return or whatever in a relatively short time period, a year, 2 years, something like that, right? In contrast, an op zone investor has to be invested for 10 years, right? And so it is very, in my view at least, there are strategies where you can combine those two forms of capital and front load the return to the ordinary income investor in the beginning, so they get their money back plus their return faster, right? And then you can, in your document, flip it at some point, flip the return so that, because remember, that money that you're getting in rent or whatever, that's just, you're paying taxes on that as ordinary income anyway, right? And then say at the 10-year time period, when you dispose of that asset, the op zone guy gets the higher increased tweaked up return. And so I think they're all kinds. The point is that we have to be creative about this, right? You can use financing, you can use ordinary income and couple it with op zone money. You don't have to have $100,000. You don't have to have $1 million of capital gain. You can have smaller dollar amounts of capital gains. I mean, look, for the effort it takes to put a fund together, you want to have some money, but right, if you have cap gains, like you don't have to be like tens of thousands, hundreds of thousands of millions of dollars. Whatever you invest, you can invest it and you could get the benefit. And again, because it's not just real estate. Somebody asked in the chat about, can I invest in a business? Absolutely. I actually think that's the best. I think we haven't seen a lot of it yet, because most people are just doing, a lot of people have been doing real estate because it's safer, but theoretically, the much better potential return, quite frankly, is on a business, right? If you can, when you see these businesses their returns. They, venture capital money or, angel money, well, really venture capital money, they're getting 15x return on their money, 15 times the money that they invest on their money, right? If you can invest at an early stage and get a return on, and get that kind of return on your money and pay no taxes on that, very infrequently do you see like real estate give you like a 15x return, right? So the reality is that even for the smaller dollar amounts, a business might, if it's a business that you believe in that has some sustainability, that's going to be around for 10 years, that really has some power. I mean, obviously that's what you're trying to build. You can use that and invest in that and get the benefit. And again, even if you're not getting a 15x return on it, you're now invested in this company. It could just be a company, and this is going to the point of how can we benefit. It could just be that it's a business that's creating jobs in our communities and is hiring people and is providing a service, and you're just getting revenue and cash flow year over year. We don't have to think about this as like we got to get this blank X return. The benefit could just be, I don't have to pay taxes on it now. I'm investing in the company. I'm creating jobs in my community. I'm getting returns on my capital because I'm getting cash flow year over year over year. And in 10 years, if we decide to sell or if we've created value, any appreciation that I've gotten that, I don't pay taxes on. That to me is a fun outcome, right?
Yes.
It ain't
diversified portfolio, I'm hearing. Yeah.
Right. We're not going to all be able to operate in a venture capital type return space. And we have to be realistic about that. Like, none of my investments that I've made are going to give me back a 10x return. But if I invest in a business, I could just be getting cash flow year over year over year. I'm adding an asset to my community that is useful to the community and gives and adds value to the community. That's all okay. And then in 10 years, if it stays around for that long, I don't have to pay taxes on that.
Yeah.
So
Dr. Keisha, Tawana, I think we just got to follow the money and learn how to play the game better.
And figure out where your capital gains are coming from. I mean, that seems like that's the first part of this puzzle is look at your assets. You may have them and not even realize it.
Exactly.
And the other point too, it sounds like, there are people who know this stuff. We got to come together with this information, and that was one of the questions I have for you, Venroy. Are there any other Black folks in particular, and maybe even you're in your space or that, you're in this space. Are there other Black people doing these kind of things in other states that, I know you mentioned that you're in Maryland, the Maryland area.
I don't know. So I know there are. So the only person there's one person, because I actually, I'm actually fascinated by it. There's a gentleman that I'm just like fascinated by, and I'm committed to like getting to know him better.
Sounds like somebody we need on the project.
His name is Chris Senegal, and he is fascinating to me because he's a developer, and he actually did a Reg CF crowdfunding raise where he raised $1 million from Black and brown small dollar investors, and he bought up a set up a community of houses and is getting a return back. So he's utilized the Reg CF law, which I'm fascinated by. And then he's now apparently doing an opportunity zone play on another project. So I know there are people out there. I have to say that I have not been like really looking, but I mean, so I would say that I know people who are doing it in like the DMT area because I'm in the space. Like I know like Faraji and like guys that are doing opportunity zone funds and investments, right? I just don't know it across it. So.
Yeah, I mean, I would imagine that if you started looking around at your RIAs, real estate investment associations, and just start talking to people, I would also suggest buyer beware, thoroughly vet anybody before you give them any money. Because you don't want to be on the other side of a scam or trouble. I've heard of Chris Senegal before, through Earn Your Leisure. I didn't listen to the interview, but I did see him on there. Maurice is saying in Baltimore, Charm City buyers, whom I'm familiar with as well, are also doing opportunity zones. So that's Kiara and I forgot the gentleman's name.
Khalil and Kiara. I know Trump City Bar as well.
Yeah.
Yeah. I didn't know that they were doing op zones, but
I didn't know they had an op zone fund. I did know that they were teaching people about op zones when they first came out. So this is, and I'm on their email list. So that's interesting to know that they're actively doing it. Chris Senegal apparently is in Houston,
yes,
according to Essie. So yeah, I mean, look, just simple Google searches, Facebook, searches will probably let you know who is doing this in your community.
And
And
do some
if you don't
research.
see anybody.
I was going to say, do some research, because based on what we just heard from Venroy, this is doable with just you and your inner circle.
Right. That's actually.
And then you can avoid paying someone else a cut of this as well, because that's doing it, they've got fund management fees.
That's what I was actually going to say. Like, depending on your experience, what you've done in the past, like how much your check size is, right? Like this is something that can be done just from you and your friends. I mean, it's just like you have capital gains and you're gonna form an LLC, and you're gonna want an attorney to draft that document because there are some peculiarities, and you need to be very careful about, like, you need somebody who can advise you about like what it is, like, because there's these things called inclusive events. So like if you get any return of your capital above how much your initial capital contribution is, that blows everything up and you have to pay taxes on that. So you're gonna want somebody who understands the law, but this is not something that's out of reach. And that's why despite the fact, so I have taken on the name the Pied Piper of OZs, because I want people to understand, like I'm walking through the streets playing my music about the benefit of this law, because I don't see anything. I think this is going to be the most transformational law that we're going to see in our lifetime, and that has a potential to really create some wealth in our communities. And we can either be upset about the fact that there's some that is going to lead to gentrification, or we can try to get in and try to make sure that we are a part of the development in our communities that we want to see, right? Because if my whole strategy around this is I'm trying to invest in houses, and we can create houses for people in the community, and we can get the rent, and we know that the properties are going to appreciate in value. And I want to invest in businesses, because if I have more businesses in the community, whether it's a bakery or whatever, it doesn't have to be anything big or sexy or fancy that's going to give me some unicorn type return. It could just be helping create an atmosphere that creates a strong community, and that's fine. And so there's just different ways to be thinking about the law, obviously depending on how much money you're bringing to how much you're putting in. But I just think that this is transformational.
Yeah. So with that, we are at the end of our time tonight, but I would love everybody to put a 3 in the chat if you learned something tonight. If you learned anything tonight, put a 3 in the chat. I see all the 3s, so 3 means love for you, Venroy. You were absolutely amazing. I knew that you would be. I will be in touch with you because obviously from the questions and everything, I think we need more of a strategy. Like, okay, everybody, let's really start getting creative here with this, because as Venroy is saying, this is not out of reach, but we have to think outside the box a little bit. So
definitely a members only session, because I see some specific questions. So I think the next members only.
Yes, members only is going to be that, smaller mastermind conversation, peer-to-peer questions, etc. And, we are looking to take people from just the idea to actually putting stuff into action. And this is one of the things that we can do. So, Anika, I saw you'll be joining the 10K project this week. Inetta, I see your payment that came through PayPal. So check your email for me. The Zoom link is there. Thank you so much, Venroy. Tawana and Dr. Keisha, do you have final words before I let Venroy give his final words?
Just want to thank Venroy again. Keep learning, keep sharing, keep being the Pied Piper, and you're always welcome here.
Yeah, absolutely. Thank you for just sharing this information with us. And you did make it very English-like. So I appreciate that.
All righty then. Go ahead, Venroy. Thank you.
No, I mean, look, I think again, we have to accept the fact that the laws they're not drafted with us in mind as a major beneficiaries. I have accepted that reality. The question really is, how do we utilize the laws as they're written for our benefit? And to me, the fact that the opportunity zone law is so open, it doesn't have a ton of restrictions on it. They try to actually make, amendments to make it easier, right? This is something that we can actually take advantage of, but you do have to have a strategy and take the benefit of the fact that you have until 2026 to invest. Like, this is not something that has to happen immediately. You can take some time to generate capital gains if you're not in the position to do that now, and be able in a couple of years to buy community or buy properties that are in opportunity zone. Because the reality is that this is going to happen in phases. All the opportunity zones can't get invested at the same time because the money is finite, and they're going to go and focus on certain areas, and then maybe once those are developed, they'll go to other places. And those areas that were once unattractive now become more attractive. And so long as you hold it for a 10-year time period, you get the benefit. So don't think of this as like something that has to be immediate. This is something that we can benefit over the long term. We can use to change our communities. So just kind of keep kind of focus on what the ultimate law is, because the law ain't going anywhere. This got bipartisan support. So as much as people are talking about it, I just don't think it's going away. And there's just too much money there. There's too much benefit. And so, we'll watch and see what happens, but let's just be smart and strategic about what we're doing.
Amen. So somebody,
before you leave,
yes.
I think we need a couple of takeaways for the community. They need to figure out if they're in an opportunity zone. They need to have that discussion with the elderly homeowners and their family. I'm not big on making decisions. Older people need to make their own decisions. That's one of the things they pride themselves in, is still being able to be stewards of their own income and finances and all of that. But tell them about this, right? So when they get that letter in the mail, or when the stranger knocks on the door and is offering them a boatload of money for the house, they understand why this is happening. So this is something you need to communicate to them so that Big Mama doesn't lose the house prematurely. So just talk to the family members about this. Any family member you have, talk to them about it. Let them do their own research, but don't let them get sideswiped by the swindlers that will knock. Because, as Venroy said, he's getting letters every week about his property, and that money will look good if you don't think 10 years down the line what it could look like.
Exactly.
So let's just share this information.
Absolutely. And Paul asked about watching the replay. Our YouTube channel, please subscribe. Please get the notifications as well. Black 10K Project on YouTube, so y'all can watch the replay there. Okay, thank you everybody. For those of you who are members, we hope to see you at 8 p.m. This will definitely be a continuation of this discussion here with regards to more opportunities that we have. So see everybody at 8 o'clock.
I think I'm a member, but I would like to join that thing at 8 o'clock.
Okay, all righty then. We will make sure that you are able to participate, Venroy.
Yes.
So, okay.
Awesome.
All right. Take care, everybody.
Good night.